The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, as we take a look at the market trade action that we saw on Thursday, relatively rough day across the soy complex. Corn, wheat holding up okay. Pretty quiet livestock trade. We have lots to take a look at. Joining us now, our good friend Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, good to have you on the show with us here today, sir. I hope your week has been going well, and I hope it's better than that soy complex. So I had a rough day on Thursday there,
It's been a rough few months here between corn, wheat, and beans, each taking their turn into the sell-off window. But yeah, rough day, not a total shock. We got to be real about this. We knew Argentina had some issues, and we have a smaller crop, probably needs to import beans. So that held the market up, but still, just the weight of that southern hemisphere crop. I try to give the visual. It's kind of a mountain of beans just inching forward every day toward destinations. And if you're an end user, you're going to start, backing away. And that's really what the export market has seen the last several weeks. We had a good number last week, a negative number the week before. This morning was a very small number. So we're not seeing that. Meal was a high price commodity. End users go more to a hand to mouth situation. And then when we look at the bigger picture perspective, when we look at where wheat prices were and where they are, and you start looking at a bean market, it looked pretty lofty. And unfortunately, for producers, if they had a lot of beans on hand, they got caught with their hand in the mousetrap here. Disappointing for new crop, though, as well. Now it's kind of reset time. What does 1250 area mean after, close to $14 a month ago? It means a lot. So I think farmer selling slows. One thing that did happen today, Jesse, on the charts, there was a gap left from July 25th on the November contract. It did go down and fill that gap. So finally that target is hit, and then the monkey is off the back of, when is it going to happen? From my perspective, I thought the when would be sometime weeks away or further. And it just, it just goes to show you how fast things can move and why it's so important to be thinking about when these moves happen. Are you prepared? And we've talked a lot about that here in the last several months, about slippery slope and high prices and high amount of contracts held by managed money.
Well, to your point, filling that gap on the chart, this is leading perfect into my next question I have for you with this soy complex. Obviously, triggering a lot of stops with this fund liquidation, breaking through a lot of key support levels, a lot of key moving averages. You mentioned filling that gap, though. Are you worried that we're still going to be in a bit of a free fall here, or are we at a point? What is the point where you think we could find some support here underneath us, Bryan?
Yeah, so the hope is that we're going to quickly form a V bottom, which means the market kind of slices straight down, slices straight up, and you look on the chart and you got a V. The reality is when prices were high, end users are buying hand to mouth because it's high price. So you don't see these robust export sales unless there's a perceptive issue that the crop is really getting punched in Brazil or something's happening. And then when prices start down, if you're a buyer and you've been buying hand to mouth, that mentality stays the same. Well, paid to not buy ahead last week because I'm buying cheaper this week, and we'll see what next week brings. So you get down to this level. But at some point, the markets get, let's say, oversold to much oversold. So when you look at something like November beans at 1250, hard to know if that's a good price or not. I would tell you that's probably what I would expect at harvest, or maybe 11 in front of beans. We're getting there kind of quick. We don't have the beans in the bin. We got carry out at 210 million. There might be some argument that number is too high. That's a really, really slim number. There's no room for error harvesting the rest of the Brazilian crop. There's no room for error in the northern hemisphere. So I don't want to be Mr. Bear here. I think the Bears came out of the woodwork, did their thing. We're getting close to low if it's not there. I'd like to think we're going to V bottom out of this, but it's a little bit early here in the U.S. and right now a little bit late, maybe in Brazil, to argue for weather. So here we sit.
Yeah, I was going to say, it feels like maybe we've taken a little too much risk premium out of this market, judging off of, thinking about weather. We got a long ways to go before we get a crop in the bin here in the US. And I wonder, though, too, just another thought here, could this move in beans possibly, convince some farmers to make some late acreage adjustments? I don't think we'd see many, but I wonder if this could possibly sway things one way or another, Brian.
Well, we've heard kind of throughout the late fall and winter about, boy, what is it going to take to get enough bean acres to meet all this upcoming demand that we have? That demand is still a year or two or three away. So with higher interest rates, that might even be slowed further as far as construction and loans and those kind of things. On the other hand, lower bean prices make those crushing plants probably much more of an investment that people want to look at.
Mhm.
So I think we've got a year here where the market's got some room to sort of build inventories, and the market thinks that it's going to build inventories. But boy, we sure aren't. If we thought we were going to see some kind of fight for acres, we're not seeing anything. It's like the corn and beans can't decide which one wants to go down faster. The ratio is 2.28. We did have just a short window of time when it reached over 2.5. That is, if you take the price of November beans divided by December corn futures, that gives you a ratio. Usually 2.45 to 2.5 starts to pull some acres from corn to beans. So right now, I'd say the advantage corn, more acres.
Well, let's talk corn a little bit here. I know another corn sale to China on the Daily Wire Thursday. That weekly export sales number was a big one. We anticipated that, I think, just with all the China sales we've seen. Corn off the high of the day, but still holding fairly firm around unchanged. What's your thoughts in this corn market after Thursday's session, Brian?
It's disappointing that when you not only get confirmation of last week's export sales, so it's around 83 million bushels with China, and then we've seen daily announcements since. When you add the whole thing together, I kind of lost track, but we're really close to 100 million bushels.
Hmm.
And all we're doing is holding the market. We had a good morning going, so the bears again are, the reward is sell the rallies. When we get rallies, sell them because they can't last. There's not enough out there. Maybe true. But at the same time, we are starting to move corn. We're seeing corn move out of the pipeline. I did the math. I don't want to argue this is accurate, but export sales need to average around 20 million bushels a week for the rest of the marketing year. That's not a tall task. In particular, if there's any kind of perceived issue with the Brazilian crop or our planting start after a sell-off, we don't be surprised if the importing countries really become more aggressive. So when you take a look at last week's export sales number, Jesse, if the Chinese number was 83 million, well, today's number is 122 million. So it's still another 40 million bushels, roughly that came from elsewhere. The lower price that has been experienced is creating demand.
And that's very, very true. And I think that demand, to me, just the feeling in this market, it feels like it's going to hold here for a little while as we've come down in price. And then I think a lot of it in front of us is going to be getting into the fields. How soon can we get corn planted, start to decide those acres? I think that's probably the next big news item in front of us here in this corn market, Brian.
It's the next big fundamental news item as far as, what ifs. More in front of us, those next week's acreage and stocks report.
Yep.
So one of the reasons I think the funds may have liquidated out of corn is that when they saw slow export sales, if I'm a fund manager or if I'm someone who analyzes the market, which I am, I'm looking at, okay, I know weekly what ethanol grind is. I know what export sales are. Those are slow. What I really don't know is what the count is in farmer, what this quarterly stocks is, but it's been made up of feed usage. So the question is, how has feed usage been this winter? So when you look at the cattle on feed numbers declining, that's one element. You look at milk production, a few more cows, so that's stable. and the demand. Hog prices have been a terrible go here. The talk is, well, the supply is a little more than expected. Well, okay, that's more feed. But when I go back to the cattle market, we haven't had a really rough feed winter. That is, the weather weight gain has been pretty solid. I haven't heard this winter, like I hear other winters where cattle guys say, "Oh my God, we're going backwards," or "We got snow." Now there's a lot of snow up north and west, a lot of droughty areas too. So anyway, the point of it is, I think this is going to be considered a relatively mild winter. And so maybe the feed usage number is not going to quite live up to earlier expectations because there weren't any what I call evaporation days where cattle just don't gain weight. The weather's too nasty. There weren't many, if any. And So I'm trying to overanalyze the quarterly stocks, but that might make some sense if that number's lowered a little.
We are having a conversation today with Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, wheat market real quick. Looked like a little bit of spreading between Chicago, KC wheat. Just wondering your thoughts with what you saw on the charts and the action in the wheat trade on Thursday.
Talk to the guys in western Kansas, the Panhandle, and those regions there, and what they see almost daily is wind and black skies. They just can't buy rain. They can't get ahead of it on irrigation. Soft red winter wheat, you're seeing moisture. You're seeing probably a good, if it warms up, you're going to see a good start to the growth season there. And that's why you've got that spread discrepancy. I look at Kansas City as an example today, July 806.5 up 7. Chicago down 3/4 in July at 674. You're really starting to see that Kansas City put big premium into the Chicago. And it wasn't that long ago where for a couple of years we saw where the hard red winter price was under the soft red. So this is more typical, and this is more reflective of weather issues and crop condition concerns.
Well, and I wonder too, I know we have the Russia-Ukraine issue still in front of us. And I know this week, President Xi of China meeting with Russian President Putin. So I wonder if some of that headline risk still may be in this wheat market, possibly just as another piece to the puzzle here. And I know too, some weather issues with wheat crop around the world. I know India's had some issues as well here recently, Bryan.
Yeah, wheat is a crop that's produced throughout the world, harvested 12 months out of the year. So you're going to hear things like, well, India has had some too much rain in areas or some this or that. I don't think any of that is out of the ordinary, but I don't think any of it's extraordinary right now. And so the traders look at this and go, well, as long as the corridor is open, Russia had this bumper wheat crop last year. They're going to continue to keep the market flush with wheat as needed, and they'll lower prices needed to sell wheat, generate income. So the corridor is extended. I don't know if anybody knows yet if it's 60 days or 120, but at least it's something. So the world has a source of grain flow. But then common sense kicks in, and you kind of step back and go, yikes, what is Ukraine really going to look like this year? What is Russia going to look like? I read an interesting article that suggests Russia wheat drops back to around 85, 86 million metric tons. This last year, the USDA has them close to 93, and Russia claims they're 100. But due to high prices, world demand has been curbed a little bit, so there's some wiggle room for that part of the world apparently to lose some production. I kind of think the wheat could be really poised to form a V bottom on charts that is overdone to the downside, and then all of a sudden it starts to tick up, and the funds who have aggressively been selling for months on months aggressively roll out. And just like the bean market fell today, I think on margin call, all of a sudden you get the market moving back up and you get short covering and margin call covering, those type of things. I got to think wheat's got a better price in front of it than we're seeing right now. The world just doesn't have enough comfort zone with flush wheat.
Bryan, how about the protein sector, cattle and hogs? I know you mentioned them a little bit earlier talking about corn, but cattle and hog trade on Thursday, relatively quiet, I felt like. Just not a lot of fresh news, some hesitancy there maybe. Any thoughts in the protein trade?
Yeah, so the cattle market looks kind of challenged right now. What I see is an uptrending market that corrected back kind of hard, left the gap. I think the challenge for the market is to kind of get some confidence that the economy isn't going to collapse or fall apart in this banking crisis. So that's, I mean, if you overlaid the cattle chart over the same window of time when the bank failures started, they're identical. So very reflective of, I think, of downward curve in demand, and then also again sort of this notion that we're not done raising interest rates. So
Yeah.
bull market's intact, but certainly challenged. If it has seen its high, I wouldn't say I've seen a good topping signal, but it does look a little tired in the live cattle market. The feeders, tough one to judge there. They really spiked up, and now they've come back. They're consolidating. But it seems to me if you're going to go out and buy feeders with corn prices down now compared to where they were, you're going to end up paying $2 a head. That's what the going rate will be. And then lastly, in the milk market, real jump and surge in the front month milk. I think that came from, it's one of those things there too, where that market downtrended. As long as you're a buyer, you're just buying it. As soon as it starts to move, we see this sometimes in the milk market where your cheese buyers, all of a sudden they're all running for supply. And you get that. Well, what was the backdrop of that? All these heavy rains in California, there is some disruption out there. And it may not be large, but perceptively it's large. And then you talk about, well, what does disruption look like? Well, reading one article of a farm that had several hundred or thousand cows, actually, they dispersed them, but they went from 3 days or 3 times a day milking to 2. All that stuff starts to, I think, weigh into the marketplace. And I think, as I mentioned before, we're in phase 2 of the industry where producers have tried to produce more, and that hasn't paid dividends. And so with higher cattle prices, I think you've been seeing more pushed into the pipeline. My guess is it should probably show up on next month's production report.
Well, Bryan, great thoughts as always. If folks want to reach out to you, get some advice there at Total Farm Marketing, what is the best way to reach you, Bryan?
The best way is with a simple phone call, Jesse. And I would ask that you write this number down, 800-334-9779. Happy to take a call if you have questions and have some discussion. I'm a little old school, but I still think that's the best way to hear things. Sometimes you don't know. I don't hear on an email, but you can send me an email, and that's Bryan with a Y at totalfarmmarketing.com, or please visit our website at totalfarmmarketing.com.
We appreciate the time as always. Bryan Doherty with Total Farm Marketing. Have a great weekend, sir. Thanks for joining us. We'll talk to you next week.
My pleasure, Jesse. Thank you.
And that's all the time we have for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.